Good morning, everyone, and welcome to the Daily Trader with Kevin Hincks. I've got two paper money trades for you today. We're going to look at UnitedHealth, which, as you know, has been a big mover with major headlines coming out on this name. And then we're going to look at Boeing. Headlines going in two different directions in two names, right? Negative headlines in UnitedHealth, positive headlines in Boeing. So we'll take a look at both of those today. Let's get to our first trade of the day, and that is UnitedHealth. If you've been watching the news, watching financial news, you know that UnitedHealth has been on quite a run. In the last 6 months, the stock has lost more than half of its value, down 51.3%. 3 months, down 37.9%. 1 month, down 30%. So this stock has really, from a high, when was the date? In mid-November of last year, the stock was $630, now trading $292. So incredible sell-off, and down again today. After opening higher, it's down again today. So let's look at a potential trade if you wanted to be bullish on UnitedHealth and buy the dip in this massive healthcare provider that's got, frankly, you can read the news, a bunch of headlines, right, about Medicare fraud and their CEO left and a new CEO and pulling guidance. I mean, it's been a steady stream of negative news on UnitedHealth. So what we looked at here was going out to June 13th, which is, I believe, 17 days. Yes, 17 days out till June 13th. And buying the 297.5 call. It was closer to there a short while ago. The stock has sold off from there in the last half hour or so. Buying the 297 and then selling this week's May 30th 312 call. So if you look at that, it's about a $15 difference in those strike prices. That's the trade, the paper money trade that we have here. You can adjust those strikes to based on where the stock is right now. We put this in at $12. It's trading $10 already. So you see the movement on a trade like this. Can you adjust your strikes lower? Yes. The key is here, I think, in the lesson is checking that right column. That's the tool that we want to use on the Thinkorswim platform. It could be 300, 315, 295, 310, 290, 305. It doesn't matter, but it's a $15 wide call diagonal. The risk being the debit paid, the target being whatever you feel that short strike is. In this case, it's the 312.5 call. So that's this Friday's expiration. The target is $312. If you're not bullish, this would be something you wouldn't want to do. You would maybe look for something in a different strategy with a bearish opinion. But this is a bullish opinion on UnitedHealth, looking for some type of recovery, or maybe good news, or maybe just less bad news is sometimes what you're looking for in a stock like this. So UnitedHealth, long call diagonal. Second one, Boeing. Now Boeing's a different news cycle story. They're settling with the government on all these problems from their past. Their new CEO, Kelly Ortberg, an engineering-focused CEO, is living in Seattle and getting production right. They're delivering more planes, getting more orders, getting favorable decisions. It's a total change in the headline flow going on with Boeing. So we did something a little bit different here, but similar as well. Something in the calendar spread family. Look at where Boeing's trading right now. It's actually relatively unchanged on a day like today, trading just over $202. What I looked at here is relatively modest in terms of the $210 call calendar. Now, the difference between the diagonal and the call calendar has the same strikes, right? Buying June 13th, selling May 30th. Same expirations as our UnitedHealth trade, except this, same strikes. The trade-off, much less of a debit. We put this in for $1.95, trading about $1.70 now because Boeing was up this morning and has drifted back now to unchanged. So looking at this trade, just a different makeup, right? The diagonal has that embedded vertical spread in it. The calendar spread, same strike prices on each option. But still, the risk on this trade is the debit paid, and the target on this trade is the short strike, in this case, $210. So those are our two trades today, both focusing on the June 13th, selling May 30th. One is the call diagonal in UnitedHealth, $15 wide strikes. One is the call calendar on Boeing, about $7.50 above the market. That's our show for today, everyone. We'll see you tomorrow with another edition of the Daily Trader. I'm Kevin Hincks.